In today's video, we are talking about gold and the potential for a pullback following the retest last Friday of very close to that all-time high around 2790. I'll show you the change in behavior that we're seeing here from gold and where this market could be going over the coming weeks. So first up, guys, let's take a look here at the daily time frame. And before I start this video too, I want to mention that I know the comments, already on YouTube are going to be, why are you looking for shorts here? Why are you talking about a bearish gold? Et cetera, right? And I want to be very clear about this, that longer term, I think that we will see higher from gold. However, at the same time, when you look at the price action since September, and I talked about this over the weekend in the weekly forecast, but ever since this breakout back here, really what you've seen here from gold is just the market going sideways. And so when you look at this price action right here, right, from this low down here to the low, back here to the high, is this where you want to be getting bullish on a market? And hopefully everybody's saying absolutely not, because, we don't have a confirmed breakout. The market is trading below that all-time high, and we do have an established range here for gold that's been in place ever since September. All right, so while there's no guarantee that we see a pullback, okay, and I'm certainly not bearish on gold longer term, I do think that there is that potential for a pullback while we remain below that 2790 area. Now, furthermore, look at the price action so far this week. And we've talked about this in VIP so far this week as well. And if you guys do want to join us in there, be sure to check out the link in the description of this video for 85% off lifetime access. Or if you're on the website, click on that join VIP link. So we've talked about the change in behavior ever since the mid-December low back here. And it's very slight. You might not be able to see it right away, especially if you don't have these levels drawn. But I do have these levels drawn because I want to show you guys something here. During this uptrend, we saw the market, put in a high back here. We saw the close above. We saw the retest back here. The market held above it. Okay, so stair step pattern up, right? Same thing back here. We saw a high right here. We saw the market break above it, respect it again on the daily. Okay, so once again, stair step up, break above it back here. We saw it respect this area as new support on the daily. So all is well back here, right, within this uptrend. Now, if you'll notice, we did have the breakout of this 2716 area, and so far we have seen no pullback into this area. However, something else I want to show you here is that we had this high right back here. We had the pullback the very next day. We had the close above, and then notice what happened on Monday. The market failed to hold above this area, okay? And that came following that Friday retest of about, I believe it was $4 below that all-time high around 2790. But the key here, guys, is that we have seen a little bit of a change in behavior from gold over the last week or so. And you can really see this too on the intraday charts. Like if I go to a 4-hour time frame, what you'll notice here is that we do have the potential for a head and shoulders pattern. Okay, so notice how back here, once again, the market was making this nice stair-step pattern up where we had these higher highs and higher lows. The market was respecting new support all the way up. And then over here, we got something very different, okay? You can even see this when you draw this line this way, where you get this low over here actually taking out this one. And that daily close back below this key level. And notice here too, we have a potential left shoulder over here. We have the head over here and a potential right shoulder. Now, this is not confirmed. And furthermore, we do have FOMC today. So you've got to keep that in mind that this could change very quickly. Okay, because again, it's not confirmed. Your neckline of this pattern is down here right around 2734 or so. And we do have FOMC coming up today, so expect that volatility that we typically see from a Fed rate decision and press conference. So look, guys, I think right now I'm not, overly bearish on gold. I'm not saying that we're going to head down and test 2,000. This is nothing drastic. But what I am saying, though, is that we could get a pullback following that retest of, just about the all-time high up there around 2790, especially when you consider the change in behavior that we've seen here over the past week or so. Now, if you are looking for shorts here, in my opinion, this is never financial advice, but if you are looking for shorts here in this area, in my opinion, first of all, you've got FOMC coming up, so it's going to be risky to try to trade any of these markets ahead of that event. So in my opinion, again, this is never financial advice, but the highest probability setup here, in my opinion, is going to be to see gold get below areas like this back here, okay? Because if you're trying to short this market, right, around current levels, then you've got to consider that this area down here is going to be critical support. Now, you could look for shorts down here into this area around 2716 to fill in this imbalance back here. It just depends on your trading style. But the only way that we get a move back here toward lows like this is if levels like 2716 fail. All right, so in other words, if gold does come back here and test 2716 and starts to trade below this on the daily time frame, then this up here becomes a failed breakout, and we're back here within this range, okay? And then we can start targeting some levels like this area down here around 2600. Furthermore, too, I want to point out one thing here, that the yearly open, okay, the 2025 open is back here on this candle. So this right here at about 26.25 or so, that is going to be the yearly open. Now, one thing that is interesting here is if we get a failure at 27.16, okay, this level up here, if gold fails to hold above this and we get the daily close back below here, then in my opinion, we're looking at, obviously some of these key support levels on the way down, but we could also see a retest of that year-to-date open. And one reason for that, apart from the fact that yearly opens like that are significant and do tend to serve as magnets for a market, but you also have this lower wick down here on the daily, right, which is untouched. So this could come into play if we do see the market get below 27.16 on a daily closing basis. Now, alternatively, okay, if we do see gold break out above 27.90, and this would have to occur on the high time frames, I'm talking daily and weekly charts. If we do see gold get above these highs back here, okay, on the high time frames, sustain itself above here, then we do have that confirmed breakout, and there is no setup for a move down here toward the lows, okay? So just keep that in mind, guys. This is going to be critical support for gold right around 27.16. If this fails, we're looking at a move down here towards some of these lows. And alternatively, if we get the break above 27.90, then we could see that breakout toward, 3K, right? But for me, guys, if I had to go out on a limb here, and based on what I'm seeing from gold and also even silver, if I had to go out on a limb and say, where is this market likely to go in terms of, do we get the break below here for a target of some of these lows, or do we get the breakout above 27.90? Personally, I think we get the breakdown from gold, just given the fact that it is a range-bound market. And like I said, we have seen that change in behavior here recently over the past week or so. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. Claim your 85% off lifetime access. See the link in the description of this video, or if you're on the website, click on that Join a VIP link. I will see you on the inside. Trade well out there. Be careful with today's FOMC volatility, and I will talk to you again tomorrow.